Yo, all right. So I thought I'd jump on here, make a video because a bunch of my friends are asking me what's going on with the crypto market. We've had a release from the PPI data, which was not ideal, and it's shaken up the markets, given quite a bit of fear back into them, considering the level of greed we were at just a few hours ago. Yesterday, basically, Ethereum knocking on the door of all-time highs, Bitcoin just hitting a new all-time high and selling off. So I thought I'd jump on here and make a quick video for the way I see the market. Um, a lot of people have their predictions, and someone's bound to be right. Nobody knows for sure what's going to happen. This is just what I see. So the first thing I'd like to discuss here is the difference between a high resistance liquidity run and a low resistance liquidity run. High resistance looks like this. You put in a high, you put in a low, and the next high takes out the previous high, right? And then rebalances down low and continues lower. This is a high resistance liquidity run. This high is more likely to hold than if this was a low resistance liquidity run, which looks like this, right? Comes back up, and then this high here will not be breached and will continue down. This one here is more likely to hold than this. If price comes back up, it is more likely to take this out if it's bearish and then reverse. Up here, it is more likely to hold. So if you're shorting, you can have a stop loss on a high resistance liquidity run, much safer than a low resistance liquidity run. Does this work all the time? Obviously not. But in general, the high resistance liquidity runs hold better than the low resistance liquidity runs. Okay, so let's move on to the charts here. So as you can see, this is a monthly time frame on the total market caps. This includes Bitcoin, Ethereum, all the altcoins that are in there, the whole market cap, right? So you can see, obviously, since this chart has it going from 2014, 2014 all the way up, it just looks like a steady uptrend for a monthly time frame. And that is something to remember because, we will hit a bear market again. It's just a matter of when, but in general, the trend is up, right? So we expect that to continue. So let's go down to a weekly time frame. You can see that, this was the previous all-time high that we set in November of 2021, the last bull run here that was set. We've beaten that this time, put another low, and we're in the process of going higher. Now, I will start off by saying I do believe the market's going higher than this, so I don't know exactly where. If I had to guess, probably somewhere in the 5 to 7 trillion dollar mark. I don't think it's going to 10. I think that's absolutely asinine to think that. So, that's just a matter of waiting and seeing. Right now, there's a good chance that we experience a pullback. If we go on the daily time frame, what's just happened, obviously, is we had previous highs here that were all set, that were all put into place, and basically we've grinded up, and then in one short day, we've had the high resistance liquidity run that I just referred to right here to here, right? And we've immediately engulfed this bullish candle. Now, there is a chance that we could bounce pretty much from right here, because if we break this down into the 4-hour fair, we're inside of a 4-hour fair value gap, right? So there is a chance that this holds right from here pretty much. I don't imagine it will, as even if it kind of bounces, which it is always likely to see bounces. Nothing just moves straight up or straight down. There's always higher highs, lower lows, etc., etc. But this candle here was quite important here. Like this fair value gap that we see right here is quite important. So I mean, even if we do bounce, I kind of expect that it would just come up into somewhere in this region, and then continue lower, just based off the move that we've seen in my experience in the markets. That's kind of what I see. Like this is, even like here, you could break this down into a 1-hour fair value gap here, and it's like it looks like we're perfectly reacting. Which, if I was, you could be trading this in a way, because again, we've swept this low with this candle, and then it kind of looks like we're having bullish price action out of here. So this is another high resistance liquidity run. So you're more likely to be able to trade this here, But yeah, again, if you're just looking at the higher time frame, like this is pretty bearish right now. But it does have a chance of holding. I will say that nothing's for sure. But if I was holding for, if I was longing this, to be honest, I'd probably be looking to take profit right at the high here, which I still think that it'll come to, but who knows? You know, there's fair value gaps in here that look vicious. This fair value gap was vicious. You know, this one's the most vicious of all, obviously, right? But so we'll see how that holds. If this does not hold, what do I see? Well, I see it coming down to at least this level here, to this fair value gap. That's what I see. So in general too, not like, you know, you can pick any fair value gap, right? Fair value gap is when you have this big impulsive candle, it's the wick before and the wick after. So it's a 3 candle formation, right? There's fair value gaps all over the time, all over the place on every time frame, right? So you never know exactly which one to use. In general though, what you do want, the ones that you will want to use are the fair value gaps that close through previous highs and lows. So for example, here is a previous high. So this candle is actually very important right here. This whole candle, right? So if we can find a fair value gap within this region right here, that's pretty good, right? So this is, to me, an area of interest. And when you are, you know, in these markets, you have to think of each high and low as a liquidation point, right? Because the market doesn't move off EMAs or whatever stupid, you know, double top, double bottom, like these weird formations. Like it'll show formations afterwards, but there's always a reason behind why it moved in that way, right? So this one here is fairly likely to get at least a big bounce off of if it reaches this level. So to me, this is interesting because on a lower time frame, this will all be a big range in here. So what I'm saying is, in general, you'll want to see the range taken out to the downside before you move higher. The fact that this was not taken out by these wicks does show me that there is a chance that it could come this low right here, and this could be an area to take a bounce off of. Now, when and if it gets to this area and this area, you know, you don't just blindly set a limit there and just buy it. I mean, you can obviously DCA if you're just buying, you know, but understand we are still at the end of the cycle here. Make no mistake about that. This is not going to be some super cycle that goes, Bitcoin is not hitting 200 grand this cycle. It will, but not this cycle. You know, it's not hitting 250 grand. All of these huge price predictions and things like that, they all come towards the end of the cycle when, you know, the euphoria is starting to build, everyone's making money, etc., etc., etc. Like, you know, people have unrealistic price targets, and that's why everyone gets wrecked, because everyone's holding off thinking that, oh, XRP is going to reach 1,000. No, it's not. No, it's not. Like, the market cap of XRP would have to be bigger than everything on Earth combined to hit that price. Like, that's just not going to happen, you know? Like, the people that are telling you those prices, those are the ones that are going to get wrecked, right? They're not the people that bought up here that are thinking XRP is going to there. You know, it's the people that bought down here that have already seen a huge dramatic increase in their wealth because of the position that they're in. But anyway, that's neither here nor there. When we approach these levels, we're going to want to see some sort of a shift from weak hands to strong hands. So we're going to want to see some level come down, and, you know, it'll come up here, one little kind of like fake out, and then likely what you'd want to see is the liquidation here. So like a low resistance liquidity run here, and then, you know, high resistance where this takes it out there, and then immediately shoot up and start creating fair value gaps here on a lower time frame, because then you know that this low is a little bit more likely to hold and we could continue higher, because we are still in a bullish trend overall. Even though this is a bit of a scary pullback right now, I understand that, but, you know, that's how it goes. You know, not everything can be right all the time. You know, not everything goes straight up. Like, market corrections are healthy. This is fine. You know, the reason I don't think that this is done, for one, if you look at the UST dominance here, this is like an inverse chart for all of crypto. So when this moves down, the crypto market's moving up, right? So obviously today this is up big because the crypto market is down, right? So we're just starting at a monthly time frame here. Let's go to the weekly right away. So you can kind of see, again, if we're talking here, like, this is low resistance liquidity here, it sweeps that, and then of course, when it comes back to test it, this low, as I pointed out, is more likely to hold, right? So that happens, and of course we get a huge rally up, right? But then as soon as we sweep a certain high, you never know which one. Obviously, you have to see what happens and react, right? But we've swept this high, and then we had another high resistance liquidity run from there, a sweep of the high, and immediately rebalance. Now there were fair value gaps in this area, and this candle, as you can see, this huge bearish candle here it closed below that fair value gap. So suddenly this candle is quite important. So when it comes back up to test, of course it wicks higher, but we're talking about closes here. This candle holds price lower. Now, since we've now created so much liquidity down here with all of these lows here, suddenly now, because we have bearish price action again, I expect at the minimum this to be taken out, right? We had a bit of a fair value gap in here, which is why it had a little bit of a shot up into the fair value gap here, and then it continued lower. It didn't close, so now we're in a position where we could theoretically start seeing higher prices on USDT, which means the market could sell off a little bit more. Now, where could it go? Well, it could go anywhere. It could go to this high. It could go up to this high, because then you're inside of this gap here, right? You never know for sure where it can go. You just have to see what price is like when you reach that level and react, right? The other way too that it could go, and it's a little scary to think about, but like it could go up to here, this huge weekly fair value gap, which totally makes sense, because again, like this candle was not taken out by this wick. If this wick had gone into there, I'd be more likely to think that we were going to reverse somewhere around here. Now, we still could. I'm not saying that, I don't really think we'll go up here, but if we do, that would be a level where I'd be thinking there's a potential reversal. So that's where I'd be buying, right? Crypto, because then I'd be expecting lower prices here, which could be, which would mean the crypto market's going to go up, right? So that's the USDT. Now, if we look at others, this is the total crypto market cap excluding the top 10. So it's kind of like altcoins, right? As you can see, like this is getting hammered today. It's down 6.4%. This is a little bit of an interesting one here, because there's definitely lower potential prices here. Like if you look, down here, there'll be some sort of a fair value gap here where, okay, it touches it there, but let's see, like monthly time frame. Yeah, there's fair value gaps. There's very, very good chance, not very good, sorry, let me rephrase that. There's always a chance that anything can happen, but it can easily wick this, go lower than this, and take this wick out and then start tearing up. But we just have to evaluate price when it comes. Right now, what we've seen is we're in a weekly fair value gap here, and what we've done is we have swept this high, and yes, we went a little bit above this fair value gap, but again, this one here on the weekly. But again, this is there was no close above, right? And then on the daily, on the daily now, assuming we close below this candle, we will be bearish. The daily ends in an hour and a bit. So this is bearish price action on the daily. Now, where could this go? It could go right into this. I mean, it can go anywhere, but I'm just, looking at points of where I think it's most likely to go, or where I'd be looking to buy. Because again, these candles on this little retrace did not liquidate lower to go higher. So this remains my target here for potentially longing out of here. Now, if this doesn't hold, there's a very good chance that it won't. Who knows? Because again, same thing, this low here was tested there and then tested out. It's building liquidity and did not come lower. And of course, what's in there? Well, a fair value gap, right? And technically there's another one there, so it's maybe the weekly fair value gap, but somewhere in this area is another great place to be taking longs. Now, I don't personally think that it will get lower than this point or this point for this cycle. I hope not, because I am positioned long in altcoins. I do have cash to buy the dip. I did take a little bit of profit on the way up here, but that is an area that it could target, but I think that would be absolute worst case scenario. and probably something that happens, in the bear market upcoming. But same thing, if you look at the monthly time frame, this is just higher highs, lower lows the whole way up, right? We've never ended the cycle without creating a new all-time high on others, right? And if you look, like, yes, we are not creating that. We came up close, which again, if you want to look from a monthly time frame, this is a low resistance liquidity run. So I fully do anticipate these highs being taken at some point here coming up. We also are reaching the end of the cycle in terms of the time. The longest the Bitcoin bull market has continued after the halving will be topping in the middle of October. So we're running out of time here unless things are to change, which you never know, they could. But if I was a betting man, I don't think this time will be different. I think we get a small retrace. See, on a monthly time frame, these are the two areas I was looking at. They look minuscule, but that's because it's, again, the monthly time frame. On the monthly time frame, it looks like nothing, like going from here to here, big whoop, here to here, big whoop. Just remember where we're going, right? Total 3 is the top 10 crypto, or it's the total market crypto cap excluding Bitcoin and Ethereum. So it's just, the top 3 and below. What happens too when we're taking out highs and lows? One way that you can tell if it's going to continue or if it's going to drop is how it reacts when it takes out a high or low. So similar in the sense that I said you always want to choose the fair value gaps to take out a certain high or a low, right? So here's the fair value gap right there. And if you look, that is the 2021 bull market top. Where does it come? It comes into the fair value gap of the candle that took out the previous bull market's high and closed aggressively through, not just a little like this, for example. Let's see, right? It just wicks it, right? Like you almost can't even tell that went higher, but it did, right? You can see right there, it did go higher. And then the fact that it came back to within the range and closed, we had a pullback, right? So that's how you can tell. When a candle explodes through, creating a fair value gap, that fair value gap candle is most likely to be used, as we use this in support. And of course, if you want to look at weekly charts, things like that, we have the, low resistance liquidity or high resistance liquidity run here where it takes out that low and then starts to go, right? These are all areas you should have been dollar cost averaging the entire time after we got into here for over a year here, but anyway, so what happens? It takes out the high, but doesn't create a fair value gap to, continue higher. So it retraces. And of course, where does it go? Well, you find a fair value gap, and that's one that you can use. This is on the weekly time frame, right? So I know you're saying, well, theoretically, shouldn't we use this? Because this is the one that closed through. Well, yeah, I mean, and even if you did, it didn't really close below there for very long, right? It just wicked into it. Even if you were a buyer in here, you're still sitting in really good profit. But again, this is not something that works 100%, just something that works, a large majority of the time, right? So that's something to keep in mind. The one thing too that really, there's a bunch of factors. Number one factor of why I think this bull market will continue is, I know this is stocks and it's not quite the same thing, but IWM, the Russell 2000, is an ETF where, it's the mid caps, right? Or it's the small cap stocks, not mid caps, sorry. So it's almost like the altcoin market of the stock market. And we have never in the history of this market gotten to a bear market when this market is not at the all-time highs. So if you look here, we had a new all-time high over here. We swept it, and what happened? We got the bear market, right? The one that led to the most recent one in April. So again, if we're going to actually crash and hit a bear market, at least by statistics, we should have to take out this high on IWM. So I believe that with, along with a lot of fundamental, I don't generally actually look at fundamentals with the charts too much, but with this, I do think that, there's a lot of money printing that's going to happen. It's going to inflate assets. So just naturally, Certain assets like, ETFs, gold, silver, Bitcoin will all move up because the supply has just had a shock, right? So, I mean, if this was at all time highs, I'd be more likely to I'd be more likely to think that there's a possibility for this to be over. But again, I still don't see that happening personally. We'll see. But ETH versus Bitcoin. So this is a chart that it's Ethereum versus Bitcoin. So when this is moving up, it means that Ethereum is outperforming Bitcoin, right? So when this happens, it generally means that altcoins are moving higher. It's closer towards alt season, and this is why this is really setting up for me for alt season to happen. Is that this looks still very, very bullish to me. Like when you look at this, because this chart, even when it's moving down, is also a bear market because Bitcoin loses value less than altcoins due to its higher market cap. So when I look at this, I see this is a weekly time frame, that this is a very interesting fair value gap to me right here. Because this candle, even though it hasn't moved through any significant highs or lows, it's moved through a lot of price that's congested the area, and then it failed to take this out. It just created equal lows, so didn't move into this fair value gap. So theoretically, if we have a crash, or I hate using that word crash, but if we have a bit of a pullback here and Bitcoin holds up better than altcoins, well, then you could see something like this happen. And I think once it breaches the low, we'll have to evaluate price when it comes, but that's the opportunity to be longing this. And I personally believe that this would probably be a target, to be honest, and it could be mark the end of the bull run is exactly too, depending on what happens here. If we just take this out and rebalance right away and go lower, it's probably pulling back. There's a good chance that's the end of the bull market. But this is one thing that I'm looking at for sure. Ethereum came ever so close to an all-time high. However, the fact that it didn't take it out actually makes me more bullish, because here we are again on the weekly. Here's the high, right? So we've stopped short. That generally, if you think about it, the reason that these highs and lows matter is because most people lose money in the markets. So think about this for a second. If you were a market maker that had the ability to move price, and the way that you made money was liquidations, right? That's why you hear short squeezes, things like that, right? What would you do if you were going to go short? Would you let this low resistance liquidity run hold, where everyone and their dog that's been shorting since here, the whole way up, they're shorting here, blah, blah, blah. Where are all of their stop losses? Regardless of where you entered, let's just, pick the middle. Let's say you entered here and you have a short. Your short is above the all-time high because you don't think that price is going to get there, right? And you're shorting it to wherever you think it's going to go, right? Who knows? Maybe you shorted after it took out this high. I don't know. Maybe this is your short. For whatever breakout trader, whatever you want to, it doesn't really matter. But this is like how a lot of people think. So if you're a market maker, where are you going to take price? You're going to, take it higher and then lower, because you'll liquidate all of the shorts and then take it lower, and no one makes money except for the market maker. So you, as a trader and or investor, are waiting for this moment. You're waiting for the liquidation to take it low, if that's going to be the case. If instead of, what now I'm believing is leaning towards what's going to happen, is that the fact that they're rejecting right before taking out all-time highs gives me more confluence that we're going higher, because this is building shorts. Now there's going to be more people on a daily time frame that have their stops here. Think about it. If you just entered right here, right here, right now, you still have and you think the bull market's over, you still have an incredible risk reward, even if your stop loss is there, because you're likely targeting this low, and then maybe even ultimately this low, because you for whatever reason, right? That's an absolutely incredible risk to reward, right? 1 to 14. And if you put it up above the all-time high, I guess it'd be a little bit lower at 1 to 11. But I don't see that happening, because what I think is more likely to happen is that they are trying to build shorts right now. They're trying to entice more shorts to come into the market right now. And then what happens? The shorts build up here, 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 here. And then eventually, when this, wherever it ends up, this is not a prediction for price. I'm just saying when it comes up here and then explodes, right? And when it explodes, it will create some sort of a fair value gap in here where it will be used to support price to take it higher. So it'll go like this, come into here, and then go higher. And personally, I think like 8,000, 8 to 9,000 is probably going to be the peak for Ethereum. I think that's where it'll go. But that's how I see price happening in this market for the next little while. But where is it going to go in the short time? Well, nobody knows for sure. That is part of the game. Best thing you can do is just to buy at discounts and DCA at proper levels. Take profits if your portfolio ever looks so good that you want to take a screenshot, take profits instead, right? Off the daily time frame, like I said, similar to how I just said, Bitcoin is technically could be bouncing, from where it's at, or I think that was on the total market cap I was showing, because on the daily time frame, there is a chance that this bounces from here. We have the daily fair value gap, which is actually holding right now, had a high resistance liquidity run. It's showing some displacement and impulsive moves here, especially with this hourly close here. But again, if I'm being 100% honest, this is just my belief. But if it happens, I'll actually be happy to be wrong. I'd rather make money and be wrong than try to have 100% accuracy of predicting everything. That is one thing. I'm here to make money, not to be wrong. So even if this, displaces up, and gets into here, I don't see it getting much higher than this high. Well, once it gets above here, this whole box is where I would anticipate some kind of a reversal again to go lower. That's just what I see. Until we get to the, mentioned parts of mentioned parts where it could go. Here's the other thing, the fair value gap. Now, it could vary. I do think that if it gets down here, there's a very good chance that this gets taken. And, even then, we'd still be in there's another fair value gap here, but I mean, even if the amount of liquidations that would happen, even if the market, came down here, did this little fake up, liquidate, and then goes higher, that would be so much liquidity right there. Most people, if it falls below here, would look at this as a lower low, and they'd be like, oh, well, it just set a lower low, the bull market's over, blah blah blah. And then it continues, right? Because the markets always seem to do the exact opposite of what the general consensus is, right? So if these areas fail, where do I see it? Well, I think this would probably be the last line of defense for the bulls, and that's this fair value gap right here, which on my personal chart, I've had this marked since we were in this area, since we were up here. I wanted on a lower time frame, either probably a 4 hour, 1 hour, something like that. I wanted to see this low taken and go into this fair value gap to go higher. The fact that it left it shows that it's coming back for this liquidity. That does not mean it's coming back right now, just means in general. So, when this bull market, hopefully, when the bull market continues and hits, I'd love to see 140, 150,000. I think it could even go higher than that, but that's where I'd be looking to get out of Bitcoin. Then it comes back lower than this. And then what's likely to happen if it hits these on the way down? Well, it'll still get a reaction, but then it'll go lower instead of, this going here and then higher, right? That's the difference that I see. As to where the target is, well, it all depends on how high Bitcoin gets. But I mean, if we're being logical about this, let's say that it gets to 150 grand, right? Let's zoom out. What would be an appropriate, every bear market, it'll drop by at least, well, it's been 80 until the last bull market, but let's say it drops by 70%. Gotta zoom out a little bit more here. Let's see. Let's say it gets to 150. A 70% drop would take it down to 44,000. So do I believe it will get under 50,000? Yes, absolutely I do. I absolutely believe that. I think that we'll have a tremendous buying opportunity again. I don't think this time will be different. You know, there's lots of levels too where this would, could come and down and liquidate. But ultimately, this is definitely one area for immediate. So that's a bad word. Shouldn't say immediate because I don't expect that to be happening right now. But this was another low resistance liquidity here where it did not take out this low. And if it did, I'd be more inclined to believe that this is going to hold, but I don't. And the fact that this looks like it stopped just short of this fair value gap, yep, just short of this, there's a fair value gap there. So I mean that could be another place to take it higher, but we'll do that video for another day. That's not what I think right now. I think these are the levels to look out from. Either we bounce from here, which I don't anticipate, or else we are going to probably come down into this area. Hopefully, holds around 110 holds and we can go higher. But I do not think the market's done. Ethereum has not hit an all-time high. That has never happened for bull markets. The others, altcoin markets, has not hit the all-time high. We've liquidated certain highs and lows, and to me, this is just building shorts to be squeezed and price goes higher. But hopefully this cleared up something for everyone. We'll see what happens. Everyone remain calm. The worst thing that could happen is that you get shaken out right before the big run happens. And if that is going to happen, altcoins are about to run wild. It's just a matter of where this bottom is, and then things are going to get crazy for the next few months. So we'll see where this goes. If you enjoyed the video, drop it a like, and any questions you have, put them in the comments. I will make sure that I answer each and every one of them. And until next time, peace.